Good afternoon, folks. This is Andy Pedraza with Special Effects Academy, and we're on the start of the week session for July 21st of 2019 in the Forex trading room. As usual, we will be going through our standard agenda, a look at the prior week, our currency strength meter for the last month and the last week, any fundamental announcements on the calendar, a look at the major pairs on the daily charts, any setups in progress, and a few words in conclusion. We'll start by looking at our long-term ledger. No change at all this week. No trades open, no trades closed. In fact, we have no trades open on this account at this time. Our intermediate term account did swimmingly well. We've closed some more trades out at profit. We've actually crossed the 30% target, or rather achievement, 30% achievement in gains on closed trades. And we're carrying a significant chunk of profit in excess of another 6%, or rather 7%, I think last time I checked, on open trades. So we're within a stone's throw of 40% right now, year-to-date gains on this account. We were actually above 40% for a day or so during the week before we had a retracement. But you can see the open trades there. We've got 5 open trades, if I'm counting well. Yes, indeed, we do. I think all but one were at profit, and the one that wasn't at profit was essentially at break even. So this account is doing magnificent. And last but not least, a short-term account. We did have another down week. We haven't had any good sustained intra-week movement that hasn't been bouncy. And that will be the problem with the short-term ledger. For one, we close out all trades on the weekend, so we always go in cash, which doesn't give us a chance to recover from anything in the following week as regards open trades, because there are none. And if the market is very bouncy intra-week, well, we will see what we see here. Not a major issue. We're still up for the year to date. We have given back some of the profit in the last couple of weeks, but again, this is normal. We don't expect the accounts to go straight up all the time. Part of trading is taking calculated risks, and some of them will pan out, some of them won't. So we did take a 2.23% negative hit on the account this week, and well, we'll be seeing what the new week brings us. All in all, not a huge loss. In dollar terms, $46, so not a big deal again. Notes and opportunities for improvement. As I mentioned, with a whippy market, which is what we had this week, the short term is not the best suited account for this. By its very nature, it's susceptible to bounciness. So we had that small drawdown. 30% year-to-date gains on the intermediate term account, and closer to 40% counting open trades. As a reminder, this is going to be a key week for the pound as the UK selects Theresa May's replacement. Widely expected to be Boris Johnson, but there is another person in the running as well, Jeremy Hunt, also a member of the political establishment in the UK on the Tory side. But the overall favorite is Boris Johnson. And, well, this will have an impact regardless on Brexit, as Boris Johnson has some very specific ideas on how he'd want to manage this, none of which are going to be too kind to the pound. Parliament has already taken steps to sort of restrict them as to how much he can do in the coming weeks. So the option of a no-deal Brexit seems to have been controlled to a degree. It's still possible. I mean, they can do nothing at all and let the October 31st deadline come, and then they will be out of the EU whether they like it or not. Especially if they're not asking for any further extensions. So definitely bouncy, uncertain times for the pound. So we do suggest everybody be very careful trading the pound this week. Of course, we always try to be careful, but anything can happen. So be advised of that. And of course, as I said, we're all cash on the long-term account right now, slightly up for the year, but not to any noticeable degree. The only other thing going on, and we'll see this in the calendar, is that we do have an interest rate announcement coming out of the EU. Moving on to our relative strength meter, the last 30 days you can see have been well, significantly volatile. We've had some clear winners, some clear losers. Out of the last month, we can see that the pound has been the overall loser, closely followed by the euro. The Swiss doesn't look good on a monthly because in the last 30 days it did have a couple of bad retracement weeks. However, the Swiss franc is extremely strong and gaining even more strength right now, as we'll see when we look at some of the charts. But in the last 30 days, it did give back some of its movement. The Kiwi has been the overall winner among the currencies. We can see that very clearly. The only thing that's outpaced the Kiwi is silver. And then we have the other currencies, which have been a bit of a grab bag. I would say that the CAD has had a pretty good month, regardless of the Kiwi and the Aussie outpacing it. That really was the effect of a couple of bad weeks. But overall, the CAD, much like the Kiwi, is in one of its strongest positions that it has been in quite a while. I would like to also point out that silver has made incredibly large move and has easily outpaced everything else, including gold, not just in the past 30 days, but also in the past week. You'll note that our usual volatility for the week is around 1 or 2%, yet the week that just ended had volatility a max of 7%. If you look at the chart, that is all silver. None of the currencies moved more than 1.5%. I checked. Silver did the 7% move. It gained 7% on pretty much everything else out there. That is an incredible move and is something that would indicate that the smart money is getting worried. So when you see the money moving into commodities like gold and silver, that means there is a lack of trust in the stock market, lack of trust in bonds, lack of trust in everything else, and the money is starting to move into a safe haven. Gold and silver are always going to be your smart safe havens. They're not going to make money for you. When you put money into silver or gold, you're not going to become rich, but it will preserve value. You will not lose money normally if you park it in gold or silver. So it's a way of hedging against everything else. So ignore the 7% on the weekly. That's deceptive. The real volatility for the week was about 1.5% if we take silver out of the equation. But for the week, we can see that the Kiwi dollar did best out of everybody. The pound did worst. The euro was a contender for the second place on who did worst. And the CAD didn't have a good week, didn't have a bad week either. It did have a retracement on Friday, which affected the weekly results. But all in all, we're not looking so much at winners here, though the Kiwi, of course, is the winner. We're looking more at the losers. Euro and pound are the clear losers here, and I would expect this to be a very difficult week for the pound. I'm sorry. Moving on to our fundamental announcements for the week, there's only one thing of interest other than the selection of the Prime Minister, which is scheduled to be notified on the 23rd. So we should have news on who the Prime Minister is going to be on the 23rd, which is Tuesday, and then the new Prime Minister will move into 10 Downing Street on the 24th, or at least that's my understanding of the timeline. So on Tuesday, we'll have that notification. So that is a key announcement, but it's not on the calendar. It's just not something that that is picked up on the announcement calendar. But we do have the European Central Bank's interest rate decision on Thursday, the 25th at 7:45 a.m. U.S. Eastern Time. That's the only one we will be trading live. So we're probably going to be opening up the trading room about 15 minutes prior to that at 7:30, and we'll play it by ear. Moving on to the charts, starting with oil, we can see that oil had yet another retracement week, so it really hasn't been able to catch a break. It was breaking out of the Ichimoku cloud, and then this last week, it went all the way down to the bottom of the cloud again, hitting the support at the 54.75, bouncing off of that, and is now inside the cloud as we speak. So that's what's going on with oil. And of course, well, I shouldn't say of course, because I don't know how closely you guys follow the news cycle, but we did have the Iranian military guard, royal guard, whatever they call it, their army. It did stop a British tanker in the Persian Gulf and pretty much hijacked it. So they've taken control of this tanker. The British government is outraged, but really hasn't done anything about it. They're trying to resolve it through diplomatic means, but it always just throws shocks into the oil markets. In this case, and don't ask me why oil actually went down in price. Common sense would indicate that trouble in the Middle East would make oil prices rise, but no, the market reacted in the opposite direction and oil prices collapsed back to that level of support. We'll be very interested to see what they do as the week begins. So this is where they are right now. Moving on to the currencies, euro dollar had a reasonably flat week. I mean, it went down, it went up, it went back down. So it did end up lower than it had started, but not a significant move, less than 100 pips all told. But it is showing signs of continued weakness. I shouldn't say weakness, it's a pair. It's showing continued signs of bearishness. So we are seeing that even though the dollar is losing value, the euro is losing value at a quicker pace, which is driving this pair down. We have been trading it down, by the way, and so far doing pretty well with it. But I would point out that it is, at the same time as the slant is bearish, there's no denying that. The last couple of weeks have been decidedly sideways. So, and again, as I will say later on in this presentation, be very careful trading the dollar as well, because it may get bouncy before it really picks a direction, regardless of which one it is. We are seeing dollar weakness, so this pair should be going to the top, and it's not. So always be very careful when things don't seem to make a whole lot of sense. Pound dollar had a little bit of whiplashiness as well throughout the week. Again, the dollar is weakening. We're not denying that, but the pound is weakening at the same time. So this thing went in both directions. It went down, it went up, and it pretty much ended the week where it began. We can still see that there is a lot of downward pressure, and this week's announcement out of 10 Downing Street, out of Parliament, whatever, is probably going to kick this one into gear. It's very hard to say which direction. And again, we're not trying to predict the market here. We're trying to ride the trends. That's what's going to give us the most bang for our buck. The smart money is on this pair heading down, but again, anything can happen. USD JPY, also a reasonably sideways pair. We do see the dollar weakness, and that's apparent in the last couple of weeks. It's gone from that high touching the Ichimoku cloud around the end of last month. It's gone back down towards the prior level of support at the 106.75. Didn't quite get down there, but it did make a good attempt, and it's still, in general, heading in that direction. USD Canadian, I'm very happy with the USD CAD right now. We've taken profit out of most of the CAD trades we've gone into in the last month or so. It's been a nice strength play for the Canadian, and nowhere is this as just apparent and obvious as looking at the USD CAD. Well, besides the pound CAD, but the pound has had its own issues. But the USD has been losing strength consistently. At the same time, the CAD has been picking it up. So we see some really, really good movements out of this pair. It's getting to the point where it's at the bottom of the chart on the daily. We would have to scroll back to see where it's been any lower. But if we do go out to a weekly, and I'm not going to do that right now, but if we do go out to a weekly chart, you would see that it has a lot of room to continue moving down. Moving on to the USD Swiss, it did go down all the way to the bottom of the chart, of the daily chart, the visible portion, about a month ago. Did a pretty significant retracement all the way back to the trend line. Didn't quite manage to touch the cloud, but it did come close. And then it's been heading down again, mainly on dollar weakness, but also a little bit of Swiss strength. that is coming back into the market. We are trading this one down. We've been trying to catch it down for quite a while, and we did. We caught the major move, the one that went all the way down to the 97 area. We got out when it started retracing and stayed out, and now we're cautiously getting back in as it seems to be continuing its downward movement. So more to come this week. We'll be keeping a close eye on this pair. This has always been one of my favorites to trade, and it now looks like it's definitely picking up speed. Much like the USD CAD, you cannot see a lower low on the visible portion of this chart, but if you scroll out or zoom out rather to a weekly chart, you can see that this one also has quite a lot of room to move. Aussie dollar very sideways, breaking out at the top on dollar weakness mainly. So as the dollar gets weaker, this one should trend higher, but it's also not moving too swiftly. The Australian is also in a precarious position, so it's in a point of weakness. It's quite, I guess it's very noteworthy that it's gone up the way it has. It means the dollar is weakening quicker than the Australian, but I wouldn't go long on this one just yet. It did break out, so we had it cross the 70.35 area of resistance, but it didn't really move much beyond it, and then quickly went back. So right now it's sitting above support, and it hasn't moved far enough for me to consider going long. Not yet. Unlike the Kiwi dollar, we know that the Australian and the Kiwi are sort of Siamese brothers. They're tied at the hip. This one has broken out quite nicely. So it not only broke out of the area of resistance, it kept going. It did have a bit of a retrace on Friday. There's no denying that, but it is a lot more bullish than is the Australian against the US dollar. It's also nicely crossed the cloud, tested the cloud, bounced off of it, continued heading up. And if this movement does continue, and there's really no reason why it shouldn't from a trend perspective, it could go all the way to the top to the 69.70 area and perhaps beyond. So this is another one of those that I'm keeping a close eye on. We are in this trade, so we do have an open trade on the intermediate, and it's carrying a nice chunk of profit. But I'm hoping for more, I guess is what I'm trying to say. So we'll be keeping that trade open, but we'll also be monitoring very closely. I hate giving back gains, so I will use the adjust to stop and use the trailing stop and whatnot, so that if we do have a retrace, we're going to get as much bang as we can. And of course, we may get taken out, but we'll be looking for new opportunities to go back in the same direction if they come. Australian, Canadian, Aussie CAD is gone sideways. It is hitting the underside of the Ichimoku cloud, so it's doing a test of resistance right there. This is the one pair that we shorted on the long-term account, and we did make a nice chunk of profit, but not as much as I would have expected after it bounced off the level of support at the 91 all the way at the bottom. So we're still looking for another opportunity to jump back in, but not until it does go back towards the bottom. Euro Swiss, it did take us in at last. It hit our trigger after it broke the area of support. It's not marked, but you can see where all those candles are there. Right at the top of the last candle is where all those other candles congregate. That would have been your area of support. It did clear it on Friday, took us into the trade. We're carrying a very small amount of profit, about 20, 25 pips, but it is heading towards the bottom. If it does cross the bottom of the channel, this might be one of the better trades for the month. And without all the volatility that the pound and the dollar might be giving us, this one might be a little bit more of a consistent trade. The euro pound has had issues since both currencies are weakening. So both the euro and the pound have been weakening. That being said, the pound has been weakening faster than the euro. We traded this one up on the initial movement on this current trend, traded it pretty much up to where it is right now, and then we got out on one of those retraces, and we've been looking for a good opportunity to go in, go out, even trade it back down if it does that. My only concern with this one is it's very near the top. So once it's that near, it's going to really need to show a lot of strength to cross that much stronger level of resistance. But we'll see what happens. There's every possibility that with the issues in the UK, it will indeed cross that 91 area and keep going. Euro JPY is at a very interesting nexus right there. It is sitting on support that it has been unable to pierce for, well, ever, in at least in the visible portion of this chart. So it's sitting at the 121 area. We needed to break that, and if it does break that, I think I already have a pending order to take us in. Again, the euro is weakening. The yen, I wouldn't say the yen is getting strong, but it's certainly not getting weak. So this should be a pretty good play if and when it does break that support. So I will be keeping an eye on this one. Euro Canadian has also given us huge profit in the last month or so. This was one of the trades we got taken out of this week on the intermediate at profit. We jumped back in. We got in at more profit. So I think we've traded this one like 3 times in the last 2 weeks, all of them at profit. In fact, the only CAD pair that did give us a loss was the pound CAD, only because it happened to retrace at the wrong moment, and it hadn't moved far enough in our favor to for the trailing stop to kick in. So we took that one loss on the one CAD pair. Everything else has just been adding money hand over fist to the intermediate term account. Pound JPY has also crossed support, which is a very good thing. It is trying to do a retrace back towards the level of now resistance, old support, new resistance. We'll see how that ends up panning out. It's normal for them to test resistance right after a piercing. It does look like resistance held, and as of Friday, it was going back down. But we'll have to see how it starts out the week. I'm still bearish on the pound in general, so I'm not unhappy to be short on this pair. But as always, especially this week, we have to be looking at them very closely. Aussie JPY, essentially of no interest. It's just trading as sideways as you could not want it to do. So that's what it's doing. So we'll have to wait for it to break out either up or down. But so long as it's doing what it's doing, it is a pass. Euro New Zealand, one of our better movers, and we have been trading this one down, and this is our biggest open profit right now on the intermediate term account. So we pretty much captured all those pips since the initial trend line break, and then we captured them again when it started retracing back down. So we're carrying, I think, 200 plus pips on this one, and we're still waiting for it to go all the way to the bottom for about another 200 pips. We'll see. Again, if it does start retracing, the trailing stop is already kicked in, so a good chunk of that profit is protected. But this is one where I have a lot of hope that it is going to go all the way to the bottom. Pound Canadian, and I mentioned this earlier, this is the one Canadian trade that did take us out at a loss. You can see where it happened on Thursday, so the second candle back. It just went all the way back up to the prior level of support resistance, took us out, and as of Friday, it was starting to drop again. But we're not going to be re-entering this one until we see a little bit more either decisiveness or the pound just collapsing thanks to the events that are coming up on the calendar. So we'll be trading this one again, I guess is what I'm trying to say, but there is no rush. And last but not least, our pound Swiss. We also have an open trade on the pound Swiss that was carrying a loss for quite a while and is now carrying profit. At least I think that one was still open. I have to check the ledger. I'm notoriously bad at remembering what I have open after I take my eyes off the ledger screen. But again, anything that is carrying any significant amount of profit, it will be protected. And of course, we're happy going in and out of these trades as many times as it takes to latch onto one of those bigger trends. And the pound Swiss, indeed, we have caught pretty much every part of that move from when it broke the trend line up above all the way down to where it is right now. I think 3 or 4 separate trades, but we have captured all those pips. That's been one of the pairs that has added the most to our spectacular performance on the intermediate term account so far. End of the charts. Let's take a look at the setups we see in progress. I can't stress it more strongly. Be very careful with the pound. This is not the week to be playing around with the pound unless you know what you're doing. and you know how to protect yourself against anything that may happen. If you do jump into the pound, I would suggest to some degree you hedge it. So if it goes in the opposite direction, you're not killed or wiped out. But remember, new PM this week, and that's going to be critical. The Swiss pairs, the Swiss is continuing to gain strength. Yay, that's about all we can say. I'm really not sure why the Swiss is, well, I do know the Swiss should be stronger than it is right now, just out of common sense, but it had been having a particularly poor period. And of course, some of that is due to smart money with all this concern with the yen, with the pound, the euro, the dollar. The smart money is not only moving into gold and silver, it's also moving into the Swiss and into the yen. So you would expect those two to start gaining strength. In fact, it should be quicker than it is. But hey, it is following commonsensical direction, so we'll continue trading that for as long as it continues moving. The Canadian pairs are starting to trend nicely again into Canadian strength, so that's a good thing. We're always looking for these longer running trends as we trade. They're the ones that are going to add the most money to our accounts. The only exception to that is the short-term account. Again, it is very susceptible to intra-week movements, but we do okay with that one as well. It just needs to be traded a little bit differently than the longer-term accounts. Dollar pairs, the dollar is seeing more weakness than any time in the last year or so. So always be careful, though. Even though it is weakening, it can bounce back at any moment. It can spike. It can do any number of things. You have to keep your eye on the dollar. It's very susceptible to whatever Trump tweets, whatever happens in the Middle East, whatever Kim Jong-un says. Any and everything will tend to move the dollar, and you might find yourself riding a wild horse when you trade the dollar sometimes. So be cautious. By all means, trade it, especially if it's moving as nicely as it is right now, but be very careful. And last but not least, the euro pairs. The euro continues to weaken. We saw that in the relative strength meter. We saw that in the charts. We're seeing that everywhere. The euro is losing strength. Trade it, but as always, trade it carefully. And finally, a few words in conclusion here, and this is, I always try to pick a theme that I've been pointing out in the presentation as we've covered it, and the theme today was risk. Your number one job as a trader is always going to be to control risk. I've seen everybody, and this is no exception, everybody who's ever come to me asking a question, asking me to teach them, asking to follow the copy trader, the trading room, they all want to know how to pick the winning trades. That's the last thing you ever need to focus on. But it is normal to think that way. When I started out, I was looking for that as well. But again, that is going to be the least of your problems. Picking trades is actually pretty simple. We've got hours of training and all this sort of stuff. But at the end of the day, if it breaks support, you're going to sell. If it breaks resistance, you're going to buy. It doesn't get any more simpler than that. Or maybe it does. If it's going up, buy it. If it's going down, sell it. But it's telling you the same thing. Go short on anything that's going down. Go long on anything that's going up. All the indicators, all the pretty lines on the charts, all the fundamentals, all the other stuff that we use to detect some of these patterns, they're all after the fact. They're telling me that something's going up when I can already see by price that it's going up. But it does serve its purpose in that it highlights some things that we want to be aware of, like where resistance is, where support is, this, that, and the other, that we can target for our limits and our stops and whatnot. So they are useful. I'm not telling you to ignore all that. You do have to know how to do that. But at the end of the day, that's not what's going to be making you money. The secret is going to always be controlling risk. And that's what we're always going to be focusing on. You have to risk in order to make profit. I cannot expect to make profit at zero risk. But I'm going to risk a small amount. I'm going to risk 50 pips, 100 pips, maybe 200 pips. But that is going to be it. I'm never going to risk more than that. And that's going to be a small percentage of my account balance. It's going to be 1%, 2%, maybe 3%, no more than that. Warren Buffett famously said that the first rule in investing or in trading is to not lose money. Now, nothing can guarantee that you're not going to lose money, but risk control makes sure that you never lose too much, because you will lose, and try to stress this as often as I can. There's no such thing as a 100% winning system. So limit your losses, and your winners are going to be able to take you with them along for the ride. So learn to control risk. Everything else is going to take care of itself. And that's it for me today. Thanks for joining us for this start of the week. Any comments or questions? Okay, guys, then thank you so very much. And we will be back tomorrow. Have a good one.